Hi, this is Anthony. Welcome back to my show. So I just got done posting a short video about Jeremy Lefebvre's picks, or one of them in particular, from a video that I watched early this morning that he just posted within the last 24 hours. He mentioned CRM, Salesforce. I looked it up. It's just done terribly in the 5 years and less, especially compared to just about anything else like broad based mutual funds or ETFs like QQQM or SPY or VOOG. Anyway, after I did that, I decided to ask Gemini, which is a Google AI product, and I forgot to put the word how, but it should be how has the stock picks of Jeremy Lefebvre's financial education on YouTube performed? This is what Google's AI, Gemini, came up with. And before I even start, we have to remember that sometimes the information that it gives is completely garbled, completely garbage in some time, some respects. It misinterprets things. It'll toss in stuff that has nothing to do at all, mention people that have no connection and may not even exist when you try to research their names. So we need to be cautious anytime we're relying or even looking at AI. But it says a definitive audited track record for the entirety of Jeremy Lefebvre's stock picks from his financial education channel compared directly against a market benchmark like the S&P 500 is not publicly available or widely reported by independent financial media. However, based on investor discussions and analyses found online, the general sentiment regarding the public performance of his recommendations is mixed, with a consensus view that his overall performance has underperformed the broader market indices. Key points often cited include mixed results. His success is frequently tied to being an early and major advocate for certain high growth stocks, most notably Tesla, which delivered significant returns for him. I no longer directly own Tesla. I had 20 shares at one time. I made some money, but I'm out of that. Obviously, there's some Tesla in the mutual funds that I own. The next thing it says is unprofitable companies. Conversely, he has received criticism for heavily promoting and doubling down on a number of smaller, often unprofitable growth stocks and special purpose acquisition companies, also called SPACs. Several of these companies, such as Tattooed Chef and Smile Direct Club, later experienced significant stock price declines or, in the case of Tattooed Chef, ultimately filed for bankruptcy. And I don't watch Jeremy much anymore. I watched him a little bit more in the past, and he certainly was pushing Tattooed Chef a lot. Style. His investing style, particularly in the period covered the tech stock downturn, has been characterized by some critics as highly speculative, leading to sharp losses in certain portfolio segments. Now, there's nothing wrong with putting a little bit of your money into more speculative stocks, especially if you have a long-term time horizon with well-diversified ETFs or an overall well-diversified portfolio. If you want to take a small amount of your money, 1%, 5%, maybe 10%, and put it in more speculative things such as a little bit of gold or a little bit of Bitcoin and a little bit in more risky stocks, that's fine, if that's appropriate for you. And everybody's situation is different, okay? And finding stocks of companies that are losing money, but losing less money over time where it looks like they may break into profitability is a way to make money. Okay, I've done that in the past. You can make a good percentage if you are able to find those. But companies that are just consistently losing more and more money, and there's nothing to show that they're losing less money, that they're going to break into profitability, or anything like that, other than just hope, and especially hoping that they become profitable because you own a lot of stock, is not a good strategy. So be cautious on that, whether you do it yourself or the people that you follow do it. Okay. It says, in summary, while he has had major successes, the overall track record of his publicly discussed portfolio, particularly concerning his high conviction growth names, is widely discussed as having lagged behind the passive returns of the major index funds. So that's something important to remember. Now, I'll copy this and paste this in the show notes on this video if you want to read it. And I'm not saying don't watch his YouTube videos, okay? You might come away with some good names that, are worth investing in or considering doing your own research on. But be very, extremely cautious on listening to any guru, including me, when they mention names of specific companies or even high-flying ETFs and mutual funds. Okay? Do your own research. Look at the fundamentals of the companies. You can look at the stock charts, but remember the stock chart shows what's happened in the past. It's not necessarily what's going to happen in the future. If you find a stock that's just going up and up and up and up, you're going to want to buy it and think that it's going to keep on going up. It may, but it always seems like the minute you buy it, that is the absolute top, and then something happens and it starts going down. So if you understand that, you're investing for the long term for most of your portfolio, you should be okay. I encourage people to get into the stock market if that's the right thing for them to do after they've paid off their debts. Okay? So remember, this is just entertainment. I'm not a financial advisor, not a stock advisor, just somebody who got interested really when the stock market collapsed or dropped 22% in 1987. So I've been looking at it since then. So, I do know a little bit about what I'm talking about. Love to hear from you. Leave a comment in the comment section. I always read them, and I do get around to responding to them eventually. Hit like and hit subscribe, and we'll talk to you later. Thank you so much.